guys, like I've mentioned before, if you want a copy of any of these slides, please let me know because some of them would be great to show to your clients. First and foremost is inventory. I know that we are having a better opportunity right now. It is winter for those people that are in my winter states. But even though homes are going for a list price, a lot of the clients sometimes are getting seller concessions right now, which is great. Inventory is still low and going to remain low for quite a few years. I don't see that for changing anytime soon. Obviously, we all know construction is down. That delayed a lot over this last year. As we always say, there is no better time to buy than now because it is only going to increase in prices, which we will see. But let's just get the biggest elephant in the room out of the way. Where are rates going to go? So economists and people that are far smarter and richer than I am have stated that we are probably going to see rates in the mid fives by mid to end of next year, which is fantastic news. Everybody will be excited to see a 5. But what I think is important to kind of point out or educate the clients on is here is the range of rates that we've had over the last 30 years. The red line is the average interest rate, which is, we'll just say right around 7%. Kicker is though, is if you look, ever since basically 2000, we have been below the average, and we have been below the average for a long time, far longer than any of us would have expected to be, simply because we've had, COVID issue that delayed it with the economy, inflation, all those good kind of things. But we are now finally going up, and we're just kind of hitting that average. The key is that in the next slide or two, you'll see that the majority of the home buyers right now are millennials, who were not alive in 1975. Most of them were probably born in 1985. So we're talking about the consumer base who has never seen a market like this, and this is all brand new to them, which is why education and discussion about the effectiveness of buying a home is even more important. This is a slide just to point out again, you guys, millennials are the largest group of population currently. Not to mention they are ranging anywhere from 28 to, say like late 20s to late 30s. So either the largest first-time home buyers, or realistically, we're having millennials be probably the pool of clientele that is even working to be a second home. Babies are being born. They are moving to different school districts. With us being able to work remotely, I've had a lot of people move to Minnesota due to being close to family. Just as much as I had a lot of my clients move to Florida because they're done with the winters. And it's not a matter of finding a new job anymore. It is a matter of being able to work and live where you want and not having to be in the same spot. So little reminder there, you guys, I am able to help individuals in all 50 states. So anyone that is relocating, please still have them give me a call. Happy to chat. This is a slide that I thought was fantastic. And to be honest, was actually even shocking to me. And I've been doing mortgages since 1999. So I've been around a little while. This is basically a status of what the top 1% of our country makes for net worth. So top 1%, $10.8 million is what their net worth is. Let's talk about even the top 5%. They have a net worth of $1 million or more. The key piece about this, though, is that 2/3 of those dollar amounts, their net worth is coming from their home equity. So we're talking 80% of their net worth is from real estate. It is the largest tool to be gaining and building wealth. And we need to let clients know that renting is not the way to go. Home ownership is the way to go, whether the rate is 5%, 7%, or in all honesty, 9%. Okay, because this is where they're going to gain a bunch of money. And if you look about it, I think about top 50%, which, hey, I'm still happy if I'm in the top 50% of Americans, right? Top 10%, 800,000. So once again, we're not talking that's how much they have in their bank account. That is their net worth, which the majority is their equity. So you'll see, we're talking about the news. I'm always talking about the news and how they just make our lives so much fun sometimes. But I like this slide because it's talking about how affordability is not going to get any better, right? How many of your clients I'm going to wait till the market changes, or I'm going to wait till it's a buyer's market, which we just discussed is going to be years. The market's going to get better. I mean, rates right now are in the lower 6s. Compared to lower 7s, that was just a few weeks ago. So it is drastically improving already, but home prices are not going to be decreasing, which leads me to my second favorite slide. Apologize, it's a little blurry, but this is a fantastic slide that comes and shows you about all the things that the news says, and about how much appreciation has actually been gained every single year since 2015, even though the news and the market has probably been telling you that the sky is falling. Okay, my highlight one is, in all honesty, this 2015, talking about a housing bubble. how a housing bubble was happening then. Funny, it's 7 years later. Now we're still having a housing bubble. Like, I think it's their favorite term, right? Everything's a housing bubble. We're not having any bubble, people. We're not going to have any bubble. It's very different circumstances. But what I like to show on this is the last few years, we've had double-digit appreciation. Okay, it's been a crazy amount of appreciation over the last couple of years, which is not very typical. If you look from 2015 to 2019, it's been that average, 3 to 5 years, it's even a little bit higher, basically 4 to 6% per year. But let's talk about dollars that your clients could have had or could have possibly missed putting in their pocket. It is big, big, big money. So if they would have bought a home for $300,000 in 2015, when once again, the news was talking about how there was a bubble, probably saying it was the worst thing to do. Today, that home would be worth $523,000. We're talking 223 grand in 7 years. Pretty sure no one's stock portfolio is doing that well, because we all know that's down right now. Or I don't even know if you have another crazy investment you can make that you can make $223,000 in 7 years, by all means, please give me a call. I'd be love to hear about it. Even if you just go, like let's talk about somebody buying in 2019, just a couple of years ago, they have gained $80,000 appreciation over the last few years. So even though that the market is going to be better in the fashion that rates will be better on the financial side at the end of the year, there is no reason for your clients to wait, because waiting 12 months could cost them $10,000, $20,000 out of their pocket. And as we always say, you're going to marry the house and date the rate. So worst case, if the market is that, not worst case, I should say best case, if the market drastically improves, we'll refinance them in a year. Now is the time to buy. Do not miss out on that equity. Here's just a quick little slide that shows, once again, people's net worth. This is their income brackets along the very bottom. And the orange amount is how much of their wealth comes from their home equity. Tends to be the theme of my speech today in December. So personally, I think average Americans were looking, 46,000 up to 127,000. If you look, we're talking 90% of their income, 90% of their net worth is from their home. Great thing to show them of why they want to rent versus own, because these are the differences as far as their net worth is concerned. Instead of participating in the news and discussing about the doom and gloom, I think the key thing for all of us financial people, whether you're a realtor, whether you're in mortgage, title, doesn't matter. If you are in the real estate world, the key is let's be a ray of optimism, okay? Because the sky is not falling, you guys. It is still great and amazing. We just need to educate, fill in our clients because they're new to this game, and talk about how the glass is still completely half full. I say all full versus half empty. So just as a recap, like I said, industry is not changing. The supply and demand is still going to remain low. Rates are going to get better, even though they've already drastically gotten better as it is. Right now is a great time for them to buy. Between now and obviously my lovely agents, better, but between now and March, it's a key place where a lot of the buyers kind of pump the brakes a little bit, and a lot of the sellers are willing to take negotiations, or like I said, give those seller concessions, things like that. By all means, hopefully you all have my contact information. Feel free to text me, call me, email me, doesn't really matter. I hope you all have a fantastic holiday and a happy new year, because believe it or not, it is right around the corner. April with Fairway Independent Mortgage, your creative and straightforward mortgage pro. I would love to either educate you guys if you have any questions about the financial market rates, or your clients as well, to get them pre-approved and get them into a house. So hope you all have a fantastic day, and I will talk to you soon. Bye-bye.